Hello folks, LA here with Weekly Report, November 15th. Doing it on the 15th late at night, but we're going to get it out to you. Got some pretty big drawdowns this week, right across the board here. You can see them. Big standout on Bitcoin. Gold continues to get slammed. Dollar up, bonds down. It's been a roller coaster week, and got a big move down on Friday. You can see the mega caps suffered as well. Let's go straight into the technical picture here. What's causing the problems? Well, a big part of it is these interest rates breached 4.5% this week, folks. It did close under it, but it got over it. I'd said last week, unless we get a spike higher in the rates, and that's what we got on Friday, it looks like the spike and dump thesis is probably not going to happen. Well, it did happen, and we got a big push back down on Friday. Federal Reserve comes out, Powell does suggest that maybe we're going to have to be a little bit more cautious on interest rates, and that kind of dumped the rates. Maybe it's just a dump after the bump, right? That's what we were thinking. You get a big bump up after the election, get a dump back. And what you're going to see here is that it's taken away most of those gains. Take your pick. Was it the dollar part of the problem? Here's the dollar breaking out 2 more swing point highs. This has been on a tear as well, as you can see, and of course that is causing some indigestion as well. If we look at the past week here, we had some big losers. What were they? Biotech. We had semis, and we had healthcare. Why was that? Well, at least these two, biotech and semis, healthcare, had to do with the Kennedy nomination. They're going to put the big guy in charge of those sectors, and the market is not very happy about that. Semiconductors, it looks to me like it's excess supply that's causing a problem, unless you're doing AI chips. I would venture to say that these rates are a problem. But it's not just that. I think the money's moving around, as you see here. And so I went back and I said, hey, let's get a visual of the big winners and losers since the election. So what I did is I pulled things from November 5th, which was the day before the election, before it hit, the results came in, and said, okay, what happened since then? The green ones are the ones that have fared well. You can see that's Bitcoin. Well, first of all, the gains have pretty much evaporated, right? They're up 1.5%, 2% maybe, but most of them are gone. Bitcoin, huge winner still. Gold, huge loser. I didn't point these out with the dollar and the bonds, but look over here. Biotech down 8, semiconductors down 5, healthcare down 4. Got discretionary up, as well as financials and energy. Those are the winners and the losers, folks. And if you want to play on the right side of the tape, you got to realize that they're shuffling out of one and into the other one, and you got to go get in the other one if you're going to be a smiley face at the end. So let's look at the neoclassical thought here as we come back. GSPC, which is the S&P 500, it's coming into 2 retest regen zones, more than 6 bars. That ought to get bought, and ought to get bought on Monday. And TA, Neo TA, right? What should happen. That's what should happen. If it doesn't, right, then something's awry. Otherwise, that's what you have to expect is going to take place. You go over to Russell. If you think about it, the weaker indexes are the ones that should break down. Well, here's the Russell coming back. What's it coming into? Swing point high, bullish retest regen, more than 6 bars. That also should regenerate, and it should regenerate right away. If it doesn't, then we got ourselves a problem. Fundamentals. Last week got CPI, got PPI. You can read the details, retail sales. Basically, the big thing that moved the market was Federal Reserve saying what they said in terms of Powell. Next week's going to be a quiet week. You got global composite, but other than that, not much happening here. bottom line, okay, all the MTDFs stretched, bad breath, those are issues. We know they have been, continue to be, and will be until something breaks. Now, we got the bump. Here comes the dump. Should we be worried? I tried to visualize, the three cases that could happen here. Now, of course, it could just go sideways, but that would be kind of negative as well. We could just go straight down, and that shouldn't happen. If it does, got a real problem. A more likely case is one of these two. One is we go up and we make new highs. The other is that we come up, we fell probably somewhere in this area, right? And then we come back down, and then we break these. That's kind of the situation. If we're going to get a real dump, you're probably going to see this case take place. Otherwise, we're just going to head straight back up. Now, this is on the daily time frame. If you pull the weekly up, and I don't have it in the chart slide, so I'll just pull it up here for you. You can see here it's a little bit different of a story, right? Because here, your retest regen is way back here, and that hasn't been retested yet. That also should regenerate back to the top side. So we may get the short-term dump, take away the entire spike higher, get the test of this, maybe break that swing point low, right? And then push higher in the end of the year. Now, I don't know if all that's going to happen, but that's certainly a possibility. So even though we may see this scenario here, it may just simply be the weekly doing the weekly thing that we just talked about. So I think that eventually, like I said last week, we have to assume that we're going to see these stocks benefit from the election. They're going to be higher. And what you have to do is take those that are working and go with them. And those that aren't, just got to avoid them. And I think it's as simple as that. This week's most interesting tidbit. How about some power, something that would power a whole city just sitting in your garage. If you look at SMRs, right, small modular reactors, which are nuclear reactors, right, they're building these things like Legos, all right, they're going to make them in the factory, they're going to ship them to the site, they're going to assemble them and produce the energy in a couple of months. But right now it takes about 13 years to build one, 13, 14 years. Now China's doing it really good at about 6, right, building the big guys. But that's a long time to wait, when conversely you could do it in a couple of months and power a whole city. Folks, this stuff is amazing, and there was a Department of Energy has approved these constructions. This ALO's Marvel SMR for construction. The company expects to be commercially viable in 2026. You can go check them out if you want. Just imagine electricity so cheap, and that's kind of what's coming probably. It's not anywhere near, but it's coming. And maybe you get a flat fee like a Netflix subscription instead of metering like we do now. Something to look forward to. Trading plan. Wow, look at this, 35% almost. And why? Well, Bitcoin and SUI, which is an altcoin, uranium, all of them kicking in, right, getting some new pushes higher. Still making some decent coin in Tesla. Got rid of what was it over here? We got rid of this K-Web. We added Nvidia. Said I was going to concentrate on these. I did. I bought this, bought that, and I want to get some more of this, but I only want this on a dump. So I expect there's potentially a dump coming, because if you look at the past, you'll get 30% dumps in Bitcoin out of nowhere when it starts going stupid, which is about what it's doing now. We're 98% invested at this point, folks. And so there are some silver trades here. They're just hanging on. If they stop out, we'll break out for even almost, and we'll just redeploy that somewhere else. But we've done what we need to do. We've got mostly invested. We'll have to see if it pays off. Here's your weekly projections. I expect it's going to be a more narrow range this week. It pushed a lot higher or lower than expected last week. And that's all I got. Have a great one. Stay safe. See you next time.